Are you wondering how rising inflation and shifting economic tides can impact your investments?
Absolutely. Insights from renowned experts like Dr. Emily Brown, Gareth Soloway, and Andy Schectman will clarify these complexities.
Thanks to powerful AI summaries, we've condensed their analyses into bite-sized insights, saving you time while enhancing your financial strategies.
Get ready to learn about crucial market dynamics from CPI inflation to the potential of gold and silver in an economic reset.
So stick around. Up next, Dr. Brown dives into the recent CPI report and its implications for inflation.
And you don't want to miss Gareth's predictions on the potential downturn in stocks and Bitcoin. Let's get started.
Welcome to Rebel Capitalist, where we dive into economic insights.
Today we are featuring economist Dr. Emily Brown, who shares her thoughts on inflation.
Dr. Brown identifies key issues impacting inflation today,
namely wage increases, supply chain constraints, and consumer behavior changes post-COVID.
Dr. Brown points out that businesses often pass wage increases on to consumers.
This results in higher overall living costs for workers.
Dr. Brown explains that sectors like electronics are particularly affected by supply constraints.
These limitations reduce competition, leading to higher prices.
Dr. Brown notes a significant increase in consumer spending.
This trend, coupled with supply restrictions, is driving prices higher.
Dr. Brown suggests inflation might stabilize with effective monetary policy.
However, persistent supply issues may keep inflation elevated.
Dr. Brown stresses the necessity of sound monetary policies.
She encourages viewers to monitor economic changes, to adapt effectively.
Today, we'll explore insights from Gareth Soloway regarding the stock and Bitcoin market.
Gareth focuses on critical economic indicators that may suggest shifts in market sentiment.
Gareth Soloway suggests that we might be nearing the end of the current bull run, with corrections likely ahead.
David Lynn remarks that this perception resonates with growing investor concerns about market stability.
Gareth points out that inflation affects consumer behavior, which could hinder economic growth.
In what way does consumer confidence play into market forecasts?
According to Gareth, dips in consumer confidence may lead to significant market shifts. Gareth expresses that Bitcoin may see heightened volatility as investors reevaluate their risk appetite.
David Lynn concurs, advising Bitcoin investors to prepare for potential price changes.
Gareth suggests revisiting investment portfolios in light of possible market shifts.
What strategies should investors evaluate?
David emphasizes that diversifying investments can shield against adverse market movements. What are Gareth's projections for stocks in the near term?
He mentions a probable downturn with stocks declining amid economic uncertainties.
And regarding Bitcoin,
Gareth predicts challenges ahead for Bitcoin, especially if volatility remains high.
Gareth concludes by advocating for a proactive and flexible investor mindset.
David reinforces the importance of being informed to adeptly manage these market transitions.
Today, we delve into an analysis by Dr. Emily Brown regarding current banking strategies and their potential risks.
Dr. Brown points out troubling similarities to the issues preceding the 2008 financial crisis.
Dr. Brown warns that banks are repeating problematic behaviors from before the last financial crisis.
Recognizing these risk factors is crucial for anticipating future economic consequences.
What does Dr. Brown identify about current lending practices?
She notes a sharp increase in high-risk lending, akin to practices seen before 2008.
Dr. Brown highlights a concerning trend of not learning from past financial mistakes.
She stresses the severe implications of insufficient regulatory frameworks.
What does Dr. Brown foresee for financial markets?
She warns that continued trends could lead to significant market corrections and increased instability.
Dr. Brown calls for heightened awareness in tracking financial indicators.
Investors and policymakers should tread carefully in light of current economic uncertainties.
Today, we're analyzing Gary Wagner's insights on the recent gold market dynamics.
Wagner highlights that gold has broken key support levels, which could create challenges for investors.
Gary Wagner explains that a strengthening dollar can significantly pressure gold prices.
He notes this correlation might increase volatility in gold markets. Wagner mentions that gold fell below the $1,800 level, a crucial support threshold.
He emphasizes that breaching these levels often increases volatility among traders. What does Gary Wagner predict for gold prices going forward?
Wagner predicts continued pressure on gold prices if the dollar remains strong.
Wagner indicates that investors should brace for further declines in gold prices.
He suggests traders remain vigilant and consider protective measures as market conditions evolve.
Gary Wagner concludes that investors must keep a close eye on dollar and gold price interactions.
He stresses that a balanced investment strategy is crucial for navigating these turbulent markets.
Today, we're analyzing the insights of Andy Schectman as he discusses the ongoing economic reset and why he believes gold and silver are vital.
According to Andy, the shift in monetary policies creates a significant opportunity for precious metals.
Andy Schectman emphasizes that gold is a critical safe haven asset during economic instability.
He also notes that silver has the potential for massive gains as market dynamics shift. Andy explains that the economic reset is forcing investors to reconsider traditional assets.
Is this why investors are flocking towards gold and silver?
Exactly, as Andy points out, it's about seeking security in turbulent times.
Andy Schectman highlights that as inflation rises, so does the demand for gold.
So, Andrew believes that gold remains a strong hedge against inflation?
Yes, and he warns that this trend is likely to continue.
Andy points out that silver, often overlooked, may actually present a significant investment opportunity.
With its industrial uses, the demand for silver could skyrocket, pushing prices higher.
What does Andy forecast for gold prices in the coming years?
He predicts that gold will not only maintain its value, but could see significant appreciation due to ongoing economic pressures.
And what about silver?
Andy believes that silver will experience rapid price increases as demand grows.
In conclusion, Andy Schectman urges investors to reassess their portfolios in light of these trends.
Absolutely, diversifying with gold and silver could mitigate risk in uncertain times.
It's all about protecting wealth and making informed decisions based on economic indicators.
Today, we're exploring market conditions, drawing insights from David Lin's perspectives and the analysis provided by Emily Brown.
Emily emphasizes that economic volatility is creating an uncertain environment for investors.
Emily Brown suggests that current market volatility is a significant concern for investors looking at equity markets.
David Lin reinforces this viewpoint, highlighting data that reflects ongoing fluctuations in investor sentiment.
Emily asserts that equity markets are under pressure from rising treasury yields, which affects borrowing costs.
Moreover, many investors are becoming more cautious, as reflected in David's discussion. Emily highlights that investors are increasingly moving towards safer assets, responding to the uncertainty in the market.
David notes a notable trend of cash outflows, suggesting a shift in investor preferences. What does Emily predict for the coming year in equity markets?
Emily foresees potential corrections of 15 to 25% as volatility continues.
David backs this up, asserting that the markets are likely to face further challenges. Emily concludes that navigating the uncertainty requires investors to focus on financial fundamentals.
David recommends closely monitoring equity market trends as potential opportunities arise.
What an incredible range of insights from our financial experts. It's safe to say that the world of finance is buzzing with differing opinions.
Absolutely. Each guest brought something unique. Dr. Emily Brown warned us about the risks that resemble the 2008 financial crisis, urging for close market vigilance.
And Andy Schectman really put gold and silver in the spotlight amidst the economic reset. It's fascinating how he sees them as essential safe havens.
Right, Gary Wagner echoed that sentiment, but added a layer regarding the dollar's strength affecting gold prices. The volatility is certainly concerning.
And who could ignore Gareth Soloway's perspective? He suggests we may be on the brink of a market correction, both in stocks and Bitcoin.
Exactly. But it's interesting to see where they disagreed, like the timing of market adjustments. Some are more immediate, while others see a longer outlook.
If you enjoyed these insights, don't forget to hit that like button and subscribe to catch our future discussions.
Every subscription helps us present more valuable content and expert analyses, so don't miss out.
Stay tuned for our next episode, where we'll explore how global trade dynamics are shaping the markets. You won't want to miss it.